see, that's the whole purpose of having a portfolio. You have the freedom of investing in various asset classes and also across market caps. Just need to take care of your overall allocation. And I think, a smart thing also done by him is the allocation to commodity, gold and silver. Abhijit is restricted to 5%. Any recommendation to go more than that, maybe 10% or 12%?
So, as per his age, what he has done, the diversification, what he has done in gold is reasonable. Generally, in such uncertain times of war, people tend to invest a bit more in asset classes like gold as a hedge. Up to 10% he can go for especially gold. I'm more inclined towards gold because it's more stable than silver. Silver is more volatile. So gold Bs again, if he wants to add, he can add up to maybe 2% more. So it's up to 7% he can inch up. But overall, it's a very well balanced mix.
Also, I was just wondering, do you recommend him to shift from Edelweiss Gold and Silver?
Edelweiss Gold and Silver, he can shift to Nippon Gold Bs. It's more stable. It's like a SIP. One can easily start an SIP in that. My preference is with Nippon, but if he's already doing it, he can still continue. That's both is fine. It's generally tracks the same commodity.
Difference between gold Bs and the normal ETF that's available?
Yes, gold Bs is for people who do SIP. So instead of people who don't want to buy physical gold, I suggest to all my clients to go. But if he is already in Edelweiss gold and his allocation is also 5%, so he can continue with that.
A lot of time what happens, Abhijit, is that people don't understand the taxation point of view and also the structure of the product, whether it is something like a gold Bs or an ETF or maybe a fund that we are talking about. How are these products structurally different? Because see, the underlying commodity is definitely gold, which is driven by international prices, that we all aware of that. But then the structure of the product also, changes the return that you get. How can we understand all of that?
Yeah, so in simple language, you can consider gold Bs as ETF. So you can consider it would be taxed under equity structure, and if he's in his case, Edelweiss Gold and Silver would be considered under a mutual fund tax scheme. So he can do his financial planning accordingly.
All right, let's move on and let's take the other question. And this is a 73-year-old senior citizen who has sent us a question. I'm not sure about his name, but then he says that he's 73 years old and he has a question on insurance. Okay, so he's a customer of Canara Bank since last 30 years and they asked him to take their family floater with New India 7 years back. He took the policy and when he checked about the renewal, he understood it is a corporate and not a retail plan and GST waiver is not applicable. So he just wants to know whether is this the right thing for him to continue as well. So thank you so much for reaching out to us. Abhijit, any guidance on these lines?
Right. So I recently had seen a documentary by one of my friend Kunal. He has made a very beautiful documentary on how mis-selling happens in the whole insurance industry. In that also similar issues were taken up. So generally when a bank is trying to sell an individual an insurance policy, one has to do a due diligence on his part. In Sir's case, what I can see is that the policy is marked under corporate, so that and because of that he is not liable for GST claim. In his case, what I suggest that first check the document in the policy document. You should check it should be under his name, and if it's not there, then he can file a complaint and get it changed. He can expect a response within 15 to 30 days, and he can expect a refund plus the interest issued. If he's able to do that, then at least he should change his policy from corporate to individual. Otherwise, my suggestion would be whenever a senior citizen person is trying, Star Health Senior Citizen is a better plan. One can consider that. And also, rather than relying on the bank's relationship managers, they can do their own due diligence and buy the policies online, because generally it's seen that a lot of mis-selling happens as the incentives are misaligned, especially when something is coming from the bank.
That's right. Very important things to consider when you're buying insurance. Always be aware of, what you are being sold. And also because you are a senior citizen, you have to realize that you have limited options. Although Abhijit has recommended a plan to you, but then how cost effective would that be? That is something that you really need to think about, because beyond a certain age, even if you're getting coverage, that comes at a cost, and if you have a health history, the cost might just go up once again. So just be very mindful of that. And yes, any more clarity if you need on the question, do send across. We are here to help you out on your investment and insurance strategies. But Abhijit, let's move on. And this is Mr. A. Narayanasamy, and he's telling us that he's invested 5 lakhs in SBI Quant fund in 2024 and it is in losses. He wants to know what he should be doing and what should be the exit strategy. Again, a case of Abhijit, where we saw a lot of funds doing good in a certain time period, and then when the market turns, these funds starts underperforming. I think Mr. Narasamy also this is the case, but one thing to note over here is not necessary you have to follow the trend and maybe just bank your entire financial strategy or dependence on that particular fund. There will be times, Abhijit, where a fund will be performing good and it will be a non-performer also. But specifically talking about a quant fund, these strategies backfire because these strategies work when there is a certain kind of a trend going on in the market. How would you like to explain this fund and the quant strategies, Abhijit?
Correct. So, in case of Mr. Narayanasamy, what I can see is that he invested in the fund when it was launched, I think in December 2024. He has invested a lump sum of 5 lakh. I'm not aware about his other investments, so only based on this, my suggestion and as in last almost 1.5 years, the fund is underperforming by 5%, as I checked. So in this, and the reason for this, so relatively it has not underperformed if we compare to mid cap or small cap direct equity. It is relatively in better shape. However, the major reason is obviously the global issues and the FI selling and the valuation compression happening. So in his case, what I would suggest that he should do a hybrid approach, wherein what he can do is that he can sell half of the fund and at a minimum loss of 5,000, and he can actually use it for the tax harvesting purpose as we are nearing the financial year end, and redeploy that partial amount of 2.5 lakh into one Nifty 50 index fund like a ICICI large cap fund, and maybe 1 lakh in a Parag Parikh flexi cap fund, and remaining 2.5 lakh in his SBI Quant he can hold, and with a actual time period of 5 years, which will give a reasonable recovery upside now that we have fallen quite from the highs. What I expect after this changes, he can expect a good 8 to 9 lakh in next 5 to 7 years if he's able to maintain this exposure.
Okay, but how can one be mindful about adding these kind of fund in their portfolio, Abhijit? What's going to be the rule of the ground over here?
See, the major thumb rule is that it depends on what is your risk appetite, what age are you in. If you are in a high risk category, then some allocation can be given to this fund, maybe maximum 5 to 10% of your overall allocation. If you are nearing the retirement, then one should avoid these kind of funds and focus on more safety driven like large cap or index ETFs. That would be my suggestion. In this case, we are not aware about his age or his goals, so I won't be able to comment in detail for specific him.
Absolutely. All right. I think with that, it's a wrap. Thank you so much for taking your time out and helping our viewers with their portfolio queries. And for all our viewers, this is the show where we take care of your personal finance. And it is called Personal Finance because we talk about your dreams, your aspirations, and the way you want to live your life, and any way you want to live your life, whatever you have that in your mind, you need a financial plan, you need a backup for that, and here is where we come for help via our experts. So just in case you want any hand holding or guidance on your investment portfolio, even maybe your insurance or something about your loan strategy, repayment strategy specifically that you want suggestions on, advice on, do do send across your questions on the WhatsApp number that's flashing on the screen, and also our email ID. You can reach out to us, and we will get your queries answered live on the show by our experts. Thank you so much for watching. Goodbye.